Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Steven Ehrlich, Director of Research for Digital Assets. Steven, thanks for coming on.
Yeah, thanks, Brittany.
I'm excited to talk with you about your latest newsletter with the theme of It's Getting Late Early. And in it, you write, quote, "One thing is becoming clearer, crypto's leash is getting shorter." Can you explain what you mean by that?
Right. What I meant when I wrote that is essentially that uh, we are coming to a point now where crypto is getting so big and it's starting to bleed over into the broader financial world that something is going to have to come to a head. There are many different types of bills floating around Congress right now that seek to address like real existential questions about crypto, such as whether or not it's a security or a commodity or some other type of asset. The SEC is going after major players in the crypto industry, the Coinbases and Krakens of the world. And the SEC is going after some of the major players in the industry, such as Coinbase, who had recently issued a Wells notice signifying a likely enforcement action. It's reached a major settlement with Kraken to force it to shut down its staking service for U.S. customers. The CFTC recently launched a complaint against Binance, alleging that the company has been selling billions in unregistered derivative products to U.S. customers. And so all of these three forces are sort of coming to a loggerhead where something's going to have to change, because we can't have the industry continuing to develop like it is. Congress trying to pass different pieces of legislation, some of which focus on trying to determine whether or not crypto is a commodity, a security, or some other type of asset. Stablecoin legislation, which really goes after a particular type of digital asset whose value is pegged to that of an underlying piece of collateral, usually the US dollar, but can have calamitous consequences if things go wrong. And then again, these enforcement, or excuse me, regulation by enforcement actions that don't provide the forward-looking guidance that even the well-intentioned members of the crypto industry are looking to have, so that they know the rules to abide by. So basically, when I wrote "It's Getting Late Early," paraphrasing Yogi Berra, the former Yankees catcher, essentially the point I was trying to get across is that although looking, for instance, at the how long it took for the internet to develop, which really took decades, not years, months, or days. We're still, I guess, in the middle of the second decade of crypto's development. But at the same time, because of all these different forces and just the widespread notoriety that crypto has created for itself, it's high time to find some way to break this logjam.
From what you're saying, it sounds like we're at a bit of a crossroads here, and you're saying
Mhm.
something is going to have to change. Is this actually potentially a good thing for both the industry and the everyday investor?
Potentially, absolutely. I think everybody wants to find a way to settle these different debates and kind of move past this crossroads, as you said it, so that again, well-intentioned, well-meaning companies know the rules that they have to adhere to. Customers that use these products and services and want to buy digital assets, either to use the functions that they provide or to invest, know that they have the right protections in place and that they're going to get appropriate disclosures so that they understand the risks associated with buying those different types of assets and getting involved. So, yeah, that is all of that would be welcome. The real question just comes down to how do you thread that line between fostering and promoting innovation while keeping a leash on this industry so that it can't run amok and create issues like we saw last year with the collapse of FTX and several other high profile companies. It would be great to have one law to rule them all, similar to, I guess, what the European Union recently passed with its markets and crypto assets legislation that overwhelmingly was carried forward by, I think, 92% of European parliamentarians who voted on it. But then we're going to get down to the brass tacks and trying to figure out how to move past some of these logjams that have hindered previous legislation in the past. But nobody disputes the fact that we need regulatory clarity.
In your newsletter, you actually quote a member of the European People's Party, and they said this: "The European crypto asset industry has regulatory clarity that does not exist in countries like the US." First, from your perspective, based on what you just said, it sounds like you believe that's true. And second, what can the US learn from the EU in terms of crypto regulations?
Right. So that's a good point, and the EU was certainly ahead of the US at this point because they were able to pass this gargantuan piece of legislation that's going to cover everything from I wouldn't call it minute, but more esoteric issues such as stablecoins to broader rules and regulations for how companies in the virtual asset space need to register with national authorities and sort of maintain adherence to EU rules. Of course, there's still going to be some nuances that need to be worked out, much like how, for instance, uh, regulatory authorities in the U.S., like the IRS or SEC, have to turn laws into actual regulations that companies under their jurisdiction or remit have to follow. A similar process happens in the EU, where once a piece of legislation moves out of the legislative bodies, then it goes to the European Securities and Markets Authority and a couple of other bodies to get that turned into more concrete regulations that still have to be translated into national laws, which aren't always necessarily uniform across the entire Eurozone. So there's still some nuance that needs to happen. But at a very high level, there are clear rules and laws and rules of the road, so that companies that want to do business in the EU know that at this point now, all that they need to do is register with one of the 28 member countries, and then they're going to get passporting rights throughout the rest of the Eurozone, where essentially they're going to have to adhere to the same types of requirements. So that stability is something that is very welcome, and right now it's not something that we have in the United States.
Steven, when you're thinking about the crypto industry within the past year, I feel like before that, if you wanted to learn about crypto, you would have to go seek out that news. But within the past months, there have been headlines that have dominated the news cycle, like the fallout of FTX, the fall of crypto-friendly banks, and it hasn't really been a good look for the industry. So what did these collapses teach us, do you think?
I think what these collapses teach us, I mean, it's an interesting way to put it. Uh, the crypto enthusiast, the crypto maximalist will say that a lot of these collapses are essentially traditional financial participants bringing in traditional financial problems into this new financial world. And because they'll argue FTX was a centralized company, Three Arrows Capital, a fallen hedge fund, a centralized company, BlockFi, Celsius, Voyager, those are I guess were brokers and lending platforms that operate in a manner akin to banks. Then, if you look at like Silicon Valley Bank and now First Republic and Signature Bank and Silvergate Bank, I mean those all fell, and those were traditional banks. And some lessons that are being drawn there kind of go back to 2008 when Bitcoin was first created, and it kind of reminded everybody why they believe there is a need for a scarce digital asset that is not beholden to regulators and more centralized entities. But and that's why I think you've seen Bitcoin peak up over the last couple of weeks or so, poke its head above 30,000, even though I think it's a bit down today. And so all of these different narratives are floating around in the space. Ultimately, though, I think it's hard to draw one or two big conclusions, because there's always going to be this push and pull between having like a decentralized utopia, which is what the most the I guess the crypto Puritans want, for lack of a better word, and then I think that the natural centralizing forces that kind of go into how regulations happen, how companies operate, and it's really, you're going to have to, again, like thread the needle or find that balance between like how decentralized is decentralized enough, how centralized is necessary for companies to grow, and where does crypto fit into that. I have a feeling that there's going to be a spectrum where it's not just a one size fits all or some sort of binary choice, and we're going to keep just seeing, I believe we're going to keep seeing issues like this develop. I mean, back in 2008, the real goal was to make sure that the globally systemic banks were the too big to fails could no longer fail. And the belief was that the smaller regional lenders in Silicon Valley and First Republic were not small by any stretch of the imagination. But at the same time, here we are, where these more esoteric regional banks that were just catering to the extreme wealthy literally put the entire global banking sector in peril. So I think, and what I'm trying to say here, it's always hard to know. You solve for the problem that just happened. It's hard to anticipate what the future problem is. And I think crypto and the traditional finance world are going to keep entangling and disentangling themselves in and out of these crises. And again, I guess it's probably incumbent upon regulation to help try to set the rules of the road so that when situations do arise, they don't become systemic, and that there are clearer pathways forward.
I do want to talk about those rules of the road and regulations. When it comes to both Democrats and Republicans, are both parties on the same wavelength of regulations? I know the GOP usually, historically, has wanted limited government regulation. But aside from that, where are we?
That's a good question too, because for a while, crypto seemed to be one of those issues, along with, I guess, China bashing, that sort of brought unanimity among Congress. Both parties seem, at least certain members within both parties, seem to be interested in moving innovation forward and ensuring that the United States is sort of like the main hub or domicile for crypto development. I did see a bit of a different perspective, though, in the past couple of weeks. About 2 weeks ago, SEC Chair Gary Gensler, as one of his regularly scheduled appearances in front of the House Financial Services Committee, came to testify, and there was a pretty stark difference between the Democratic and Republican lines of questioning. The Democrats pretty much went after him when the conversation did talk about crypto, which did take up most of the time, but there were also other discussions about the pace of issuing rules and guidance and ESG issues, which aren't privy to or aren't part of this conversation. But when it did go to crypto, the Democrats hit him pretty hard against not stopping the FTXs and really questioning what is the value of this industry, where they pejoratively sort of call it something akin to just a dream for criminals and illicit actors and gambling, for lack of a better term. And then on the Republican side, they really were going after Gensler for not giving clear guidance. I think that this was punctuated at the very beginning of his hearing when Patrick McHenry, the chair of the committee, spent almost his entire 5-minute Q&A period with Chair Gensler trying to get him to admit whether or not Ether, the native token of the Ethereum blockchain, is a security, and Gensler kept demurring. And this asset's important because after Bitcoin, it's the biggest asset in the world, digital asset in the world. It's been around now for the better part of 8 years. And a few years ago, someone at the SEC that actually said in a speech that he believed that Ethereum had evolved enough and had become sufficiently decentralized to no longer qualify as a security under the Howey test, which is based on a 90-year-old court ruling. One of the key factors that goes into whether or not a particular offering is a security or an investment contract is if there's an expectation of profit based on the actions of a centralized group of people or an individual purpose. So if an asset is not centralized, then by definition it cannot be a security, and Gensler would not answer that question. So I think that just really kind of speaks to the divide right now, where Democrats are looking at this from a consumer protection point of view, and they kind of see it as a way to win points with the electorate by going after schemers that are looking to take advantage of well-intentioned investors. And the Republicans are worried that domains such as the European Union and China, who's developing a digital yuan, are going to take advantage and get a first mover advantage in this newer industry, while the U.S. appears to be asleep at the wheel.
Why can't Gensler answer the question of, is this a security? Is this not? You said it's the second largest digital asset in the world. That seems like a pretty straightforward yes or no answer then. Is it he doesn't know, or he doesn't want to answer it?
So that's an interesting question. I mean, I think in the back and forth, he kind of demurred a little bit by saying that he's speaking in his own capacity. He doesn't necessarily want to speak on behalf of the commission. To which Kristen Smith, the head of a prominent lobbying group, Blockchain Association, told me in an interview afterwards that Gensler would probably have no trouble saying that a share of Apple stock is a security, but that in and of itself, I get the sense that aside from not wanting to speak for the commission, I'm guessing that the SEC has several investigations or and perhaps pending enforcement actions that are going to at least indirectly or implicitly imply that Ether is a security. So he doesn't want to sort of put those out in the open until until that day comes.
Steven, in our conversation earlier, I wrote down something that you said that I really liked, and you said new financial world. That's where we're at right now. And back in February, you and I talked about whether or not we would see regulations, and you said you were hopeful because there are some questions that really need to be answered here. So now as we sit here 3 months later, are we any closer to more regulations?
Yeah, as we sit here, it's hard to know, and if we're closer to new regulation, and sometimes the problem is that even if you see progress, even if a bill gets out of a committee, even if a bill passes the House or the Senate, then it has to still be signed by the president. So a lot needs to go right. Right now, we're in a climate where the big debate is focusing on the debt ceiling and whether or not the U.S. may no longer be able to pay its bills, at least once June starts, which is the latest reporting that I saw. That said, I have spoken with a couple members of Congress in recent days, in particular about the stablecoin bill, and they are confident that in the next quarter or next couple months that there will be a unified bill that can get out of committee and hopefully be voted on by the full House. But then it's going to have to be reconciled again at the Senate. It's going to have to pass the Senate. It's going to have to pass the president's desk and be signed into law. So we'll see. I do know that a lot of members of the community are hoping that the European Union passing, again, its landmark legislation will sort of light up like a fire underneath some of these lawmakers, so that while they are working hard to pass legislation to understand the key issues at bay, which is not something that was necessarily the case several years ago, that they're going to find a way to move over differences, paste or bridge their differences as quickly as possible, so that they don't necessarily throw the baby out with the bathwater.
Steven, obviously I'm not saying this is a good thing, but do you think the fallout from FTX paired with the collapsing of crypto-friendly banks really made the need for regulations come to a head here?
I do think that it created an opportunity, and it showed the potential harm that could come from doing nothing. So from that point of view, it could be good. And I mean, obviously, customer harm is not something that either one of us, Brittany, would ever wish for. But and hopefully that those bankruptcies can be processed in an expeditious manner, so that the creditors of those companies get as much restitution as possible. So it did certainly create an opportunity. That said, I think maybe the one wrench that is also through is that it created, I think, more of a partisan divide over crypto than there was perhaps last year. And last year on the Democratic side, I know, for instance, Elizabeth Warren, the senator from Massachusetts, had been seen as sort of fighting crypto tooth and nail at every possible turn. But I did get the sense that the Democrats and Republicans were working together to try to find a way forward with bipartisan legislation that would set rules of the road for this industry. And I think that I do fear in some ways that the very public collapses of FTX, where crypto becomes a political football. Gary Gensler himself sort of becomes like a weather vane for how different parties are feeling about the industry, could create a few more challenges. So, and that's on top of what is just intellectually or academically a very difficult legislative or regulatory question. So it could create an opportunity, but it also, again, throw a few more wrenches into the works that need to be overcome.
How are you feeling? Are you feeling optimistic right now? Are you feeling, what is your sense here?
My sense is that we are going to see progress on a stablecoin bill first before anything else, and the reason is just that it's the simplest. In fact, there's even a template where I know lawmakers on both sides see as working. Back in June, the New York State's financial regulator, Adrienne Harris, and her team at the NYDFS released pretty comprehensive guidance with regards to regulating stablecoins, as far as when they need to be audited, the types of collateral that are allowed. to be held against these assets that are in circulation, how redemptions work, and how quickly people need to be able to redeem their assets. And obviously, it's a big lift from going from how one of 50 states is regulating an asset to a national piece of legislation. But New York is as a financial hub, it is an epicenter of crypto activity in the country, and I think it provides a pretty good roadmap that I know that lawmakers are trying to follow. Right now, I think the biggest inhibitors for stablecoin legislation include, for one, whether or not states have the ability to authorize or banks or non-bank service providers to launch stablecoins, if there's going to be some, or if that licensing or regulatory authority has to come from the Fed, or excuse me, at the federal level. That seems to be the one major hangup, and perhaps one way to get over that is by having some sort of federal backstop or some sort of minimum threshold of regulatory guidance, so that there can't just be, at least from the Democratic side, like one state out of 50 that is very lax in authorizing stablecoin issuers to potentially the detriment of the rest of the country. So I get the sense that lawmakers are hopeful that they're going to be that's one of those types of bridges or gaps that's going to be able to be overcome, so that we can at least see stablecoin legislation. And then, of course, the bigger prize is a more overarching piece of legislation that will settle debates as to whether or not certain digital assets are securities or commodities, and therefore who the primary regulator would be it the SEC or the CFTC or perhaps somebody else. And once we kind of get to, if and when we get that, then I think the U.S. will be back on the same regulatory footing as the European Union and some other progressive jurisdictions around the world.
That sounds pragmatic but hopeful, so that's exciting news. So what's next? As we sit here right now, it's the very beginning of May. What is your outlook for the next month? How does the crypto industry look?
Yeah, so over the next few weeks and months, I mean, there's going to be more hearings, more discussions, a lot more backroom dealing as lawmakers and their staffs try to move a way forward, and then at the same time, I think there's also just going to be a lot of economy watching. I guess tomorrow, the Fed's going to announce what's expected to be another 25 basis point rate increase. Economists are hopeful that it will be the last increase in this current hiking cycle, and things can start to go down. And then when that happens, hopefully digital assets will continue to rise, and it'll be a good middle part of the year after what had been a pretty roaring start. And then in the meantime, I mean, yes, a lot of focus is going to be on legislation, as it should be. But I just got back from Consensus, probably the biggest annual crypto conference in Austin, Texas. And while I was there, the mood was definitely more somber than it's been in other years. But there's a lot of companies out there. There's a lot of projects that are continuing to build, that raised funds last year or the year before during a very bullish cycle, and they see times like this as a way to sort of work a little bit more in the background and focus on core issues that are going to perhaps be more important to crypto's longevity. Such as its scalability, its ability to protect user privacy, its security, and ultimately finding some of those killer use cases that will make people make people want to use decentralized applications, and not just for reasons of getting rich, but because they are just as fun or more fun or more useful than the traditional Web 2 apps that we use every day.
Sounds like the crypto industry is working on the long game right now. And per usual, Steven Ehrlich, thank you so much for your insights.
Great. Thanks, Brittany.